everybody. My name is Donna Feazell, and I'm your host of The Edge on IC Radio, your source for news and entertainment. You can also find us on television, Channel 182 on Charter Communications, and Abundant Television, found on Roku, Apple TV, and Amazon Fire. So let's just get right to it. We're going to talk about interest rates, and this is how rising Fed interest rates affect both of us, okay? They affect us all in so many different ways. So let's kind of get into the nitty-gritty on that and see just how it does affect us. So federal interest rates are now at their highest levels since 2008. The Federal Reserve approved a 0.25% hike in interest rates at its March 2023 meeting. The third time rates have gone up since November 2022 in an attempt to help curb the runaway inflation. Okay, in December, a Fed upped interest rates by half a percentage point, then hiked them again by a quarter percentage point in both February and in March. Now, the latest Fed increases brings the main policy rate to a range of 4.75 to 5%, the highest it's been since January 2008, amid that Great Recession we had. In general, a rate increase is good for savers, and we may see some drops in prices in consumer goods. But the hike is bad news for borrowers who will see mortgage, consumer loans, and credit card rates jump even higher this year. At the March 2023 meeting, Federal Chairman Jerome Powell indicated that they'll monitor the situation as to whether more interest rate increases are to come. I fear that they probably will. What rising interest rates mean to us, okay, to you and me. Just to be clear, the federal interest rate is the rate at which banks borrow money from each other. That's what it's all about. But the rise and fall of what interest rates affect consumer interest rates on savings accounts, credit cards, mortgages, and other personal loans. So everything you purchase on credit has an interest rate attached, and that interest rate is impacted by the change of the federal interest rate. So it won't stay that way, okay? Now let's talk about what it does to credit cards and credit card use. Simply put, your credit is going to become more expensive. Most credit card companies provide variable interest rates, which means they can and they will change interest rates on the balances you carry from month to month when the federal raises interest rates overall. The current average variable rate for credit cards that charge interest now is about 19.07%, according to Federal Reserve, up from about 14.56% at the beginning of 2022. That rate is only expected to inch higher. So here's the take-home message. Do what you can to pay down those credit cards now. Okay, it's a good time to have money saved and a bad time to have accrued debt. So if the federal continues to raise the benchmark rate, that might be a time to consolidate your debt to a credit card with the lowest interest rate, or find a zero interest balance transfer offer that for a limited time would allow you to pay toward reducing the balance and not increase those interest payments. It's like it's on and on and on. If you ever get started with credit card debt, it won't stop. You've got to be the one to stop it. Okay, now mortgages, what's that going to do? Okay, if you currently have a fixed rate mortgage, the interest hike will not impact your monthly payments, but your rate is variable. If it's variable, that's why I've always been nervous about a variable interest rate. It's about to go up, and your monthly mortgage payment will rise. The current average fixed mortgage rate on a 30-year loan is 6.32% in March 2023, down the previous record of 7.08% in October 2022, according to Freddie Mac. Now, the average fixed mortgage rate on a 15-year loan is currently at 5.56%. Should you want to refinance in response to the change in rates, the available bank rates are also going to rise in response to the Fed's actions. So the prime rate also impacts home equity lines of credit, so you should consider looking to reduce that debt amount as well. Millennials and Generation Z have enjoyed historically low mortgage rates much of their adult life. So first-time home buyers might be shocked, especially as rising interest rates collide with escalating home prices. Now, consumers looking to buy a home can expect to pay more interest, which has been close to zero. First-time home buyers might be the most affected because they will see increased interest rates with fast rising home prices in many markets. I don't know, home rates have really went up. I mean, the value of your property has really went up. I just wonder if it's ever going to go down. What I fear is going to happen, this is just the Donna Fiesel fear on here, they're going to stay high, maybe even climb higher for your property. Only thing about it is anybody who would like to buy your house, if you'd like to downsize or anything like that, it's going to be tough on folks to buy because they're going to have such high interest rates. It's going to be pretty tough. Okay, so and while we're talking about mortgages, let me go ahead and mention this. I've mentioned this on several different shows, and that's how to pay extra house payments to keep from paying so much interest. So the more you apply to principal, well, then the quicker you're going to get that house paid off, and this applies also for an automobile. So the quicker you get it paid off, thus the less you're paying on interest. Okay, banks don't want you to know that, but this is the bare facts. This is how it is. So if you put in, if it's only $100 per month, so you go ahead and put an extra $100 towards that your house payment and make it in 2 payments. This is the trick. Okay, so only $100, okay, and pay it every other week. You're going to wind up, first of all, making 1 extra payment per year. You're tricking yourself. So you're making an extra payment per week. Go ahead and do the numbers on that. Then, or per month, I'm sorry, per year. And then when you're paying, let's just pretend your house payment is $800 a month. Okay, and you want to add an extra $100. And so instead of paying $400 every 2 weeks, you're paying $450 every 2 weeks. You would be amazed at how much quicker you're going to pay off that loan. You'll also be amazed at how much interest that you are paying that you're not going to be paying. That's just do that. Okay, if you don't listen to anything I ever say on the show, do that. Only do, if you just do at least a $100 payment. Get yourself trained like on the 1st and the 15th of the month. 2 different things again. Now, you're going to be shaving off a lot of that interest, okay, because you're going to be paying the house off faster. And if you do that, you're actually tricking yourself into making an extra house payment at the end of the year. So you'd be amazed how much it's going to save you. I'm looking out for you, okay? I don't care about the banks and everybody else. I want you to be okay. All right, automobile loans. It's going to cost more to buy a car on a payment plan, but interest rates aren't the only factor driving up those car prices. Now, your overall interest cost will depend on the interest rate you qualify for. In general, the higher your credit score, the better your rate will be. So new car prices have remained stubbornly high since the pandemic. We know that. At first, supply chain issues and then chip shortages were to blame. While some of these issues have been resolved, inventory still remains low compared to pre-pandemic levels, which means car prices aren't likely to come down anytime soon. It's the old law of the law of averages, what's available and what's not available. And that just really, that affects pricing on every single thing. Now, interest rates on car loans for buyers with lower credit ratings are most likely to increase as a result of the Federal Reserve's hikes. Okay, so as of March, the interest rate on a 60-month or 5-year auto loan is about 6.55%. According to the Federal Reserve's latest data, expect that number to climb. Again, make an extra payment. If you can, let's say your car payment is $500 per month. If you'll just make $600 per month and then make that in 2 payments, do the first of the month, have your mind programmed, okay? So the first of the month, you're going to make half that payment, and then the other half, you're going to, on the 15th, you're going to make another payment. You'll trick your mind into making an extra payment per year, plus you're paying down on that credit or on that interest rate. Now, also, this is another key point with your house and with your automobile insurance. This is what you need to do. When you're making the payment, you need to tell the person you're making the payment to. If you're doing it online or wherever you're calling it in or whatever, you need to tell that person to apply that towards the principal. Okay, let's go ahead and cut into a commercial break. We're going to be right back in just a few minutes. The Hatter Cafe and Country Inn is nestled in the northeast corner of Alabama the Beautiful in the delightful town of Mentone. We're located on top of scenic Lookout Mountain near Little River and DeSoto State Park and located only 5 minutes from shopping and restaurants. There is also a nearby community walking path and golf course. We welcome everyone through the doors and we are committed to outstanding service for all guests. At the Hatter Cafe and Country Inn, we invite people from all walks of life to come and get away from it all, enjoy the open spaces, treetop views, fresh, clean air, and experience Southern hospitality at its finest. We look forward to hosting you. To reserve a special event, or if you would love a special getaway at the Country Inn, you can call us at 256-634-2018. The only place I buy my beef is Lone Tree Ranch in Collinsville, Alabama. Their cattle is born and raised on their ranch, grass and grain fed, and you can feel confident when you serve your family and friends because their beef is all natural and no antibiotics or hormones are added. You can buy whole beef or perhaps go in with family or friends and buy half. Their customer service is number one as they take care of the delivery to their local processor and can deliver to your home for a small added fee. They also offer herd replacement heifers. I always call Lone Tree Ranch in Collinsville, Alabama for my beef specialty recipes and cookouts, and you can too. Food shortages are increasing, so buy local by calling 256-523-6462. That's 256-523-6462.
Hello, I'm Mike Lindell, and my employees and I want to thank each and every one of you for your continued support. With everything going on right now, your rest is so important. That's why we're having the biggest MyPillow sale ever. Not only are my bed pillows as low as $19.98, but you can get the best body pillows ever. Regular $89.98, now only $29.98. Take your rest on the go with our Roll and Go Anywhere MyPillows for only $14.98. And we have our new couch and accent pillows. They aren't just for looks. They have MyPillow's patented adjustable fill that gives you that amazing MyPillow comfort. In this economy, you get the best gifts ever for the best prices ever. So go to MyPillow.com or call the number on your screen. Use your promo code and you get deep discounts on body, couch, bolster pillows, and so much more, including my original bed pillows for as low as $19.98. Please order now while quantities last.
At Liberty Bank, we're all about community, whether it's to help with a charity fundraiser or help families in need. Toys at Christmas or a local football team, we're here for you. You see, we realize the importance of family. Sometimes it's to build a new home or necessary home repairs. We're here for you. If you like the feel of a small town bank with all the conveniences of a big city bank, we're here to serve you. You will find us at any of our convenient locations in DeKalb, Marshall, Etowah, and Blount counties in North Alabama. You can call and speak with any of our friendly staff at 256-659-2175 or check us out on the web at libertybankal.com. And thank you for your support of our community. Member FDIC Equal Housing Lender. Jeff McCurdy of the McCurdy Law Firm has been a public service of this area for over 10 years. McCurdy, a member of the Henniger City Council, serves as prosecutor for the town of Sylvania and was named public defender for the city of Rainsville. The McCurdy Law Firm is located at 17326 Alabama Highway 75 in Henniger to better represent his Jackson and DeKalb County clients. If you need to be represented by a true public servant with proven success, call Jeff at 256-996-8701 or send a private email to McCurdyLawFirm gmail.com. No representation is made that the legal services performed is greater than the legal services performed by other lawyers.
Are you ready?
We all wonder what tomorrow will bring, but the future lays itself at the feet of the prepared and surrenders to the will of the persistent. It's not easy, but today shapes you so you can shape tomorrow. With Northeast Alabama Community College, when the future asks if you're ready, you can answer.
Yes.
Begin your future at Northeast Alabama Community
Good afternoon.
College.
We are back. My name is Donna Fiesel. I'm your host of The Edge on IC Radio, your source for news and entertainment. You can also find us on television, channel 182 on Charter Communications, as well as Abundance Television, found on Roku, Apple TV, and Amazon Fire. We've been talking about, this is, by the way, a website I go to frequently, thepennyhoarder.com. You'll find all kinds of great tips on how to save money and how to earn extra money, that kind of thing. And this is a really good one. It's called, and this really gives you the brass tacks on everything. And it's how the rising Fed interest rates are affecting all of us, okay? Like the normal everyday person out there. So we're talking just for a few minutes about credit cards and what that's going to do to the credit card industry. Pay those things down as quick as you possibly can. If you have multiple credit cards and you owe a lot of money on them, reward yourself. Let's say you owe $500 on one of them. Get that one paid off quickly. Okay, and we've talked about this on several episodes. So when you get that paid off, reward yourself. Okay, rah, you did a great thing. So then what you want to do, the money you were paying extra to get that one paid off, apply that extra money to the second credit card. So let's say you owe $1,000 on that one. The money you would have paid on that $500 one, you're going to go ahead and apply that extra money. I'm saying extra money. It's going to take some sacrifice, okay? So going ahead and put that towards the second credit card until you got them all paid off. And then guess what? You're free. You're no longer a slave when it comes to making payments, okay? That's what debt is. You're a slave when you're making debt payments. Okay, we talked about mortgages, and they can mortgage the two payment and your car payment. Do the same thing, okay? So let's say you owe $500 on a car. Okay, you're making $500. That's a high payment, but let's just say you are. And if you apply an extra $100 per month towards that car payment, and you need to make your house payment and your car payment 2 different times of the month, okay? One thing you're doing is you're tricking yourself into making an extra payment per month. Let's say you make the payment on the 1st and on the 15th. So you're tricking yourself that way. Plus, you're getting that interest paid down, which means you're not a slave again to interest payments. So I'm with you on this, okay? And I want to see you get out of that trouble. I really do. All right, so we've been talking about automobile loans, and so let's talk about this. They said that the average, as of March 2023, the average interest rate on a 60-month or a 5-year auto loan is about 6.55%, according to the Federal Reserve's latest data, and we're all expecting that number to climb. Okay, so let's go ahead and talk now about student loans. Okay, this can be a touchy subject right here. Find out if your loan is a fixed rate loan. Most federal loans are, or a variable rate loan. I would always do a fixed, okay, because you never know what's going to happen to the economy. Something bad goes on, you're going to pay for it with extra interest, okay? Now, the Federal Student Loan Forgiveness Program announced under the Biden-Harris administration is currently being challenged in the Supreme Court. Whether or not you submitted an application, the program's fate remains uncertain for now, so it's important to start preparing your finances should student loans not be wiped out. A final decision is expected to be made by the Supreme Court sometime this summer. Private loans can be refinanced the same way a mortgage is, and there will be a competition among lenders, okay, for new business as a result of the new Fed prime rate. Sometimes when there's competition, that makes life a lot easier on us. Okay, interest on savings will increase. It's one thing coming out of it. It may be difficult for consumers to find good news related to a rise in the federal interest rate, but there is one tidbit, so that's earning more interest on your savings. Right now, it's like you're not making any interest hardly at all. So if you have a savings account, you're likely to see your interest rate grow to more than 3%. Okay, it could possibly do that. That's a big change from the paltry 0.5%. That's ridiculous. Or less that savings accounts were offering as part as about a year ago. So when the Fed raises its prime rates for borrowing money through the rate offered by federal insured banks for saving money, that money rises too, okay, in your savings. It's a great time to be saving money versus holding debts or borrowing money, okay? You can find that you can get by with actually one car in a family. Oh, I grew up, when we grew up, we only had one car. And I didn't see any issues rising out of that. And guess what? If you only have one car, you're making one car payment if you're doing that. Or if your car is paid off, good for you. Absolutely. That's an awesome thing. Also, think about this. You're only buying tires for one car, okay? Maintenance for one car. And I'm going to tell you what, buying a car battery, even if you install it yourself, is more than tripled in price just in the past couple of years. So, whoo, boy. All right, interest on savings will be increasing. So, why the Fed raises the interest rates? I want to know why, don't you? Let's find out why. Okay, the Federal Reserve uses the benchmark interest rate to regulate the economy. The higher the interest rate, the more expensive it is to borrow money for major purchases such as homes and cars, thus slowing commerce and battling inflation. The lower the interest rate, the less expensive it is to borrow money, hereby invigorating a sluggish economy. Let's get that stopped. It said it's one of those spam calls anyway. Okay, now since December of 2008, in response to the Great Recession, the benchmark rate has been unusually low, starting at near 0% and then rising to 2.25% in December of 2018, about a year before the pandemic struck. Now, in response to the economic calamity caused by the pandemic, the interest rate dropped again to near zero in March 2020, and it didn't change until 2 years later in March 2022. Since then, it just keeps rising. Okay, so several issues have contributed to inflation, including the supply chain issues, the Russian-Ukrainian conflict, pent-up consumer demand, and 3 pandemic relief payments. Okay, so that's all happened. So we've had all this weirdo stuff happening in the United States and all around the world. Okay, how to prepare your finances now ahead of more federal rate hikes. There are things that we can do, okay? So let's get through those. Pay off high interest debts ASAP. Don't wait, do it. Pay it off as quick as you can. It's going to take some sacrifice, but you can do it. Now, as mentioned, as the Fed raises the interest rates on your credit card debt is going to rise too. So the APYs will climb, only further compounding your debts. So it's best to pay down credit cards debts as quickly as you can to eliminate financial burdens and to boost your credit score. And also, you're not a slave to debt. Who wants to be a slave? And I'm going to have to tell you what, the way this country is being run right now, it's incredible. The amount of trouble people are getting themselves into. Okay, add money to a high yield savings account. A high yield savings account. While interest rates on debt rise and borrowing money becomes more expensive, those of you who do have cash saved will see higher interest payments. So add as much extra to your savings as you possibly can, and you'll see more earned interest every single month. Okay, this is another good one right here. Start a side hustle. Okay, side hustles have become the lifeblood of millions of Americans, especially after the initial onset of the pandemic. Side hustles like driving for Uber, or Lyft, or delivering groceries with an Instacart or Shipt are smart ways to earn extra cash on your own time and pad your savings in case of extra debt payments. Have a garden, sell your garden vegetables. And this is going to be like really, really important. That's what we're doing right here on the farm. So I've planted just tons and tons and tons of tomatoes and all kinds of extra vegetables because I'm pretty sure we're going to have some more problems with the supply chain. Well, when that happens, I'm going to have vegetables that I can sell. I'll just put it on the marketplace on Facebook, or put a sign outside the yard or something like that. Those are things that you can do to help extra money. Okay, let's see. Oh, use cashback apps to get paid for your purchases. Now, cashback apps like Rakuten and Fetch have put some coins back in your wallet for all those everyday purchases you already make, like on Amazon or your favorite local restaurant. So signing up for apps like these is an easy way to get your money back that you'd otherwise be leaving on the table. I've mentioned this one to you as well, and that is a Capital One Walmart card. Now, you can get other cards. I think you can go Amazon and that kind of thing too. So what we do, everything we purchase, if we do it online, because if you get that Capital One card, if you're paying for your Walmart purchases online, and you either go pick them up at and I don't like shopping in Walmart anyway, so go to the curbside or have it delivered to your home, you're getting 5% back. Now on a $100 purchase, that's $5, but now $5 is $5. If you're walking down the street and you saw $5, you'd go pick it up, right? Okay, so that's important. And then if you go inside the store, okay, now I'm having it shipped, or I'm going to go to the curbside and pick it up. But if I go inside the store, I get at least 2% back. So that's pretty cool. And that's off of my gasoline expenses and everything. And then if I use it anywhere else, I'm going to get at least 1% back. So some mortgage companies will let you use a credit card. So let's say you have, let's do a little figuring here. So let's go ahead and pull up that calculator. So let's just say I've got a mortgage payment of, let's just say $1,000. And I get back 1% of that every single month. That is $10, okay? $10 is $10, right? It'll buy a couple dozen eggs maybe. But anyway, go for a credit card that's going to give you some back. Now, here's the key to using that credit card, okay? You cannot rack up and pay interest. But if you're paying interest, well, then you're dissolving everything you were making on the money back. So the best thing to do, put your whatever you're buying, put that on that credit card, but now pay it off. So I know we pay ours off before it's due. And then that way I don't have to pay any interest charges. And I'm making 1 to 5% back off of that credit card. You can do the same thing. Now, some credit cards will let you earn points towards travel. And so a lot of my friends do that. So you say, how are you going on all these trips all the time? And they say, I'm not paying anything for the trip. And I'm going, how are you not paying anything for the trip? And they say, it's my credit card. You know, so you can get a credit card that way, and they'll pay you mileage. Whether you rent a car, whether you fly, whatever you're going to do. Okay, now, this is another thing, and then we'll have to call it a day. Cut back on unnecessary purchases, okay? You know, we all like to grab dinner with friends, catch a movie, plan a trip. But if you're feeling that you're debt saddled in 2023, it's wise to spend less on what's frivolous. It's also a good idea to focus that extra money on debt reduction and building an emergency fund. You better be doing that. I'm warning you. I'm seeing the handwriting on the wall, okay? Because there'll be a day that you'll wish you had saved some money. And you need to do that right now, because I'm just telling you, the government's not looking out after you, okay? You've got to look out after you. My name is Donna Fiesel. Thank you so much for watching The Edge on IC Radio, your source for news and entertainment. You can also find us on television, channel 182 on Charter Communications, as well as Abundant Television, found on Roku, Apple TV, and Amazon Fire. And don't forget, check out that podcast, netnewsnetwork.net. I love the podcast there. Lots of fantastic talk show hosts are on that channel right there as well. And you'll hear the absolute truth out of everybody. I hope you take care, and I'm looking forward to seeing you again really, really soon. And thank you again so much for sending in your request for shows. You can send that to Donna at donnasedge.com. Donna at donnasedge.com. You take care, and I'll see you soon.